Good morning, everybody. It is Friday, April 5th, 8:46 a.m., and we have got a jobs report that came out 15 minutes ago, and that is the headline for the day. We got to talk about this jobs report. This jobs report right now is primarily the reason for why the market is down, but the market also is kind of high off this news. So the market tanked immediately when this jobs report came out, but then the market also went down as well. And the market's kind of trying to reconcile, is this news good or is this news bad? And they don't really have a full answer. So let's look at what the job report is. Thank you, everybody, for being here this morning with me. We got to talk about the jobs report. Palantir deal yesterday. Want to talk a little bit more about the Oracle implications, given we got to learn more about the deal. So we'll talk about that. SoFi, we'll discuss them as well. Why did the market tank yesterday? It's a stupid reason, but it's a simple reason, and so we'll talk about that. And we got a lot more stuff to talk about as well in the context of Tesla and a variety of these stocks. Nvidia not doing the best in the pre-market. So let's first get to the jobs report. Let's get to that really quickly because I want to talk about that first and foremost. That seems to be one of the big things this morning. So here we go. Here is the jobs report. 303,000 jobs were added versus 214,000 that were expected to be added. So that's a pretty big differentiation. I mean, that's 214,000 we thought we would add, 303,000 we added. That means the unemployment rate is only 3.8%. Some people thought, if we got jobs at about 150, 160, which is what a lot of the big banks thought we would get, that unemployment rate would get closer to 3.9, 4%. That's not happening. So people are still finding jobs, which is why this is bullish. But the report does signal that if unemployment is not going up, it further gives the Fed a reason to not have rate cuts. If unemployment is not bad, if people have jobs, if wages are good, if you can go to a variety of different companies and try to apply and they have to fight for you, versus you fighting for them, then that means that the Fed has zero reason to try to stimulate the economy by cutting rates, which would be a stimulus to the economy. Now, inflation will have to come down before they do rate cuts, which is probably the best reason to initiate cuts, which is a better reason if it takes longer than the unemployment rising in order for them to cut. One thing that Jess mentions here in her comment, in March, they revised the Jan numbers from 333 to 229. So that's about 167,000 jobs they revised to the downside. So in January, the numbers came out. They said, hey, guys, we added 333,000 jobs. Today, they said, actually, we revised those numbers. We only added 229,000 jobs. And so that is something I think the market is trying to reconcile with right now. This is a really good report. It's bullish. It makes sense. It's like, all right, people are finding jobs. But the market's also like two things. Number one, S&P, as you can see, is up 0.33% in the pre-markets. The market is reconciling with two things. Number one, if we have jobs, then we also have inflation. And the idea that inflation is going to come down and rate cuts are going to happen because inflation is coming down, probably you got to push it out another month, July, or maybe, September versus the June expectation that a lot of people are starting to have, right? So that's the first thing they're reconciling with. The second thing is that if the January numbers got revised, are the March numbers going to get revised, right? It's an important question, and it's a reasonable question to ask, that if you had to revise and decrease jobs by 167,000 back in January, in April or May, are you going to come out and say, yeah, we didn't really add 330,000 jobs. We added like 210, and the market's going to have to, the market's going to have to realize the fact that we don't have as many jobs as the economy is saying. The JOLTS report data came out this week as well, and it showed that we have 8.5 million jobs or 8.7 million jobs available versus 8.5, which was also very bullish because it means that, look, we have more jobs. People have the opportunity to get a job. Again, the reason we have jobs is because companies are hiring. Companies are only hiring if they feel that people going to work for them is going to increase top line revenue. So they will take on the additional costs, which will be the salary of the employee and the benefits and everything that they have to provide in order to grow that business. That means that earnings in the stock market should theoretically reflect that, because if consumers have jobs, they're spending. So you can afford to buy Domino's pizza one night, and Domino's gets the benefit of that. And people are getting paid by Domino's to work at Domino's Pizza, which means the whole cycle, capitalism, kind of makes sense. People buy products and services. They have money from their jobs to buy products and services. More people get jobs because other people start to build different products and services, and the entire economy kind of flourishes. That's like the utopian dream around capitalism. So far, even though we had that nasty little thing called inflation spear up over the past 2 years, J-Pow is living in that Goldilocks utopia where people have jobs, unemployment is not rising, and inflation, even if it started to moderate the rate of decline, it is indeed declining. And so the question simply becomes, how deep is that unemployment rate going to become? Or how high is it going to go before inflation fully comes down? Because if it gets to 4.5%, J-Powell would need to cut rates right now. That would be bad. The problem is you can't cut rates if inflation is coming down. If there's not an inverse relation between inflation and unemployment, then J-Powell would be in a pretty tough situation. Let's get some analysts and see what they have to say as well. You guys didn't like the Domino's analogy for some reason. Look, I'm not a big fan of Domino's pizza either. I'm more of a Papa John's guy, but still, it's not the worst thing in the world. Here, okay, let's see what CNBC has to say about this jobs data. Here we go.
Your reaction to the numbers, your reaction to what you think this means for the Fed.
So this is a surprisingly large number. I think that the analysis so far is pretty accurate. This is doesn't look to be, it's a very large number, but it doesn't look to be inflationary because we're somehow getting these jobs filled. I think the story that we haven't talked about that seems to be lingering in the background is whether immigration is playing a role in filling some of these jobs. And as long as that's happening, I think we're going to be okay. I don't think the Fed has enough yet to make decisions about whether to cut rates. I think we still have to hold on. And I'll note one other thing, that we had a very strong jobs number 2 months ago that we revised down. So we have to be a little bit careful about reading too much into 1 month's jobs number.
Stephanie Kelton, let's get your take on this, and then we're going to weigh in with Stephanie Link on the market reaction. But Stephanie Kelton, your thoughts on this?
Yeah, this is an economy that's being powered by two things: fiscal policy and net immigration. And, I think it's really important that we do pay attention to that last part of this. Last year, half of the growth in the labor force came from net immigration. There were 5.2 million additional jobs last year, thanks to net immigration. And it's been the key to rebalancing the labor market. It's a huge part of the reason why we've got the growth that we've got and the disinflation that we've had. So, this is an eye-popping number. I think that the story it tells is that we should be expecting the Fed to follow through on that promise of higher for longer. I don't think it makes a whole lot of sense to think in terms of 3 and probably not even 2 rate cuts this year.
Given this jobs report, she's right. Tom Lee came out the other day, said, actually, we should probably get more than 3 rate cuts when we got really good ISM data. So I think the state of the markets is that, like 2 days ago, we got phenomenal ISM data that shows that inflation is indeed coming down. 58 expected, we got 53. Nice decline. Today, we got 100,000 more jobs than we expected, which theoretically means that there will be more inflation. And so I don't know, dude, as you can see this 10-year right here on the chart, 4.382%, it went up higher as this jobs report came out because the idea was that inflation would be sticky. And one of these pieces of
Becky, real quick,
yeah,
I am correct. 25 to 54 prime age workforce participation is up 0.5 point from pre-pandemic. Rick is correct. The overall is down 0.5 point.
Down.
I think seniors are the swing factor there.
Okay.
So nice when both Rick and I are right.
Wow.
Doesn't happen often.
Stephanie Link, we're watching the market. We were looking at the Dow Industrials indicated up by 100 points when we started. Now it has given back. Actually, let's show me the futures again. Okay, Dow futures still indicated up by about 65 points. But clearly you did see the move in Treasury yields that adds a little skepticism to the idea that you're going to get a rate cut anytime soon.
Yeah, we're probably not getting a rate cut anytime soon. At the end of the day, though, this is a good number. We have a really good economy, 2.5% GDP. That's what we're running at right now. And that's on top of all the momentum that we saw last year. And it's led by the consumer. And I think we were all a little bit nervous about average hourly earnings, maybe that coming in a little hot after the ADP report, but it was right in line. But it's also very supportive of the consumer continuing to spend. And Steve mentioned that leisure and hospitality led the way. So we root for the consumer because it's 70% of our economy. We root for services because that's 75% of consumption. So it's all going in the right direction. It's continuing on the momentum from last year. All of this means earnings can continue to be good.
Yep.
double-digit earnings growth in the fourth quarter. I think you're going to see 8 to 10% this year. These numbers are very supportive of that. And so the other interesting part is we're seeing a broadening out of the marketplace. There are places to actually put money to work, and on the dips like yesterday. And I think a lot of that yesterday was because oil prices rose above $90 a barrel on Brent. Watch oil prices, that's a big deal. But the broadening out is very supportive for a market that is probably going higher, edging higher.
You're a buy.
All right. So her argument there, which I relatively agree with, is that if consumers have money because they have jobs they can spend, if they can spend, earnings should still be able to put up the numbers, which means the 2024 rally, or at least broadening out of the rally, which we've seen, Tesla and Apple down year to date, other companies still doing well, S&P still up almost 10% year to date, even though 2 of the big 7 are down. It means other companies are actually getting some momentum. And the only reason those companies have momentum is because the consumer is strong. It is 70% of the economy right now. So, and like, you know, this is something that I think is very important to understand. Palantir is not a consumer-focused company, but Palantir today, they just announced, like, I mean, they've been working with Lowe's for a while, but they announced like some webinar they're doing with Lowe's. Lowe's is a consumer company. In the United States, Lowe's is like Home Depot, right? They sell a lot of this like equipment, stuff like that you just have to use at your house, gardening tools. If the consumer's not buying that stuff, Lowe's doesn't have a reason to buy software from Palantir to manage all their inventory, right? So like everything at the end of the day goes down to the consumer. The key here is that if people do have jobs, how much is that going to affect CPI? And the oil prices we got over the past couple of days, I mean, I don't know if you guys are seeing it yet. Let me know in the actual price that you're paying at the pump. I'm not seeing it yet. I'm assuming like by next week, the price at the pump is going to be more, is going to be, you know, a lot higher than it was over the past 2 weeks. Brent crude at $90, WTI crude at $86. And obviously yesterday we saw that there's a lot more instability going on in the Middle East, particularly in regards to Israel and Iran and who's going to sell oil to each other. And that's causing some more problems when it comes to oil prices. So that is an important deal. That is probably going to affect inflation. Higher jobs are going to affect inflation. But some of the broader things around inflation, like shelter, that we know is coming down because of the housing data we got in February. If that starts to come down as well, maybe there is a world somehow where oil can go up, jobs can go up, which means that part of CPI can go up, but other parts of CPI can come down. And that means we don't get a fundamental decrease, but we get a slight decrease. And that's enough for the market to still think that we're going to get 3 rate cuts and have this fantasy of 3 rate cuts. And then maybe by election time, we get at least like 1 or 2 cuts and then the market rallies. I think that could be the end of the year. I think that's how it could play out. But it's going to be interesting to see if that's actually how it goes down. So we got $3.12 for regular fuel in North Jersey. You're getting $3.12, dude. I'm in Jersey. I'm not getting $3.12. I'm getting at least $3.40, $3.35. I need to move where you're moving. $3.12, and that's not bad in Jersey. That's not bad at all. $3.19 here in Texas. Okay, that makes sense to me. $3.19 in Dallas. That's really good. $4 to $5, and yeah, that's not. that's that you're not going to get in Washington. You're not going to get a cheaper price. $3.05 in South Florida. $4 in Houston. Oh, let's go to Truflation. Yeah, let's go to Truflation. We haven't looked at Truflation in a minute. And then I want to talk about why the market tanked yesterday, because some people are still confused why we had that nasty decline yesterday at 2 p.m. It was literally because one guy said one thing. So inflation currently in the United States, from Truflation's perspective, Truflation being a more aggregate source of data. Yeah, look, they've got it at 1.83%. They've got it below 2 already. And for them, they're looking at real-time data. I would argue shelter is probably 50% of the reason why they think it's down so much, because we know that shelter inflation is starting to come down, but the Fed is using very lagging data. And they're not going to cut rates on the assumption that inflation is down, because also inflation doesn't feel like it's down, right? It doesn't really feel like it's down yet to the end consumer. And so there's no way the Fed's going to cut rates, which is okay. I think we've all accepted we don't need rate cuts. The economy is doing fine. I mean, at least from a stock market perspective, and at least these jobs reports are telling us that people have jobs. The moment that changes, we've got to hope inflation is already down to the point where the Fed is ready to initiate that cut. Because if inflation's still sticky and the economy is breaking, like, we're screwed. We are absolutely screwed, because Jay Powell is going to let the economy collapse before he lets inflation rise. We are not going to become Zimbabwe or Venezuela, right? That's just like, I don't think that's what they would let America become, which means we would have a lot of economic suffering. And maybe that does happen in like 2025, 2026, but I think in 2024, that might not necessarily be the case. Along with the fact that, Bitcoin is rising as well. We'll talk about Bitcoin in a second. 349 in Virginia, 265 in Nebraska. Dude, this is why Buffett never left. 265? Are you kidding me? This is like, why don't we all live in Nebraska, dude? Like, this is amazing. It must be an amazing quality of life there. 337 regular. I get premium. It's 411. All right, so gas is still 330 to 4-ish. If oil prices stay at 90 for the next month and a half, that sucker's going up to like 410, 415. And that would be bad. That would be. Now, look, I don't drive as much anymore as I used to. So, like, I fill up my tank maybe once every 2 weeks, right? It's not that crazy, but it's still, it would be a very big strain on the economy. And even if you particularly don't drive, it's definitely going to hurt people that have to pay at the pump. Why did the economy? So that's what the jobs report came in. For those that are just joining, we added 330,000 jobs. Unemployment still at 3.8%. We revised 167,000 jobs down from January. Markets like it. They don't love it. Let's look at the market real quick. S&P 514.90 up 0.36%. SoFi up 0.68%. PayPal up a little bit. Celsius up about 1%. Where's Palantir? Tesla is down just a little bit. Nothing crazy. Palantir is up 22.50. Robinhood's been taking a beating the past 2 days. Robinhood 1832. I was surprised. I thought Kathy was selling Robinhood yesterday. She wasn't. So it must have been either another institutional investor or retail just taking profits, because I thought the decline we saw in Robinhood. It's funny. Robinhood declined like 1% before the market declined 2%, and then they fell 3%. So they were kind of signaling that the market was going to fall, and the market fell. I thought Kathy was liquidating. I thought she was selling a ton of shares to buy Tesla, but she didn't sell anything yesterday. She did buy another 170,000 shares of SoFi yesterday. So Kathy did buy some more SoFi. So Robinhood's down. CleanSpark in the pre-market. These guys are, 1561. Wow. CleanSpark's taking a beating. Okay. Coinbase is taking a beating. Coinbase 244. That's down 2%. MicroStrategy, that's down 1%. That's not too bad. Marathon, that one also. Yeah, Marathon now in the 18s. Yeah, the crypto stocks are getting hit. Why are the crypto stocks getting hit? Because Bitcoin still at 66,000. We rebounded from 64 a couple days ago, but still right now it's 66. And so some of the crypto stocks are not doing the best. Okay, why did the markets fall yesterday? So today, the market's going to have to reconcile with this jobs report that is good, but like maybe too good. So it's one of those things the market has to deal with. Yesterday, the markets didn't have to deal with any numbers. They had to deal with this guy. For those that don't know him, his name is Neil Kashkari. He is one of the 12 members of the Federal Reserve that ultimately makes the decision on whether we cut rates, don't cut rates, pause rates. His vote really matters. So when he says something, people listen. Yesterday, he was on CNBC for literally 3 minutes, and he said one sentence, and the sentence was akin to, if inflation is still sticky, if it goes sideways, we might not have any rate cuts at all. It's not like that was new news. We already knew that. Jay Powell has basically said that. I mean, maybe he said it in a little bit more of a dovish way, like we're going to be data dependent. And this guy just flat out said, hey, we're not going to do rate cuts if inflation is sticky. But data dependent means, hey, if the data is bad, we're not going to cut. That is the implication of every time Jay Powell says data dependent. For some reason, the literal words that this guy said, I don't know, and I'm probably sure there are algorithms in the stock market that are dissecting the very essence of the words that these guys speak. And if there's a negative sentiment associated with the word, or the phrase, like no rate cuts, then the algorithms just sell off the stocks. And I feel like that's what happened yesterday. At 2 p.m., he said this, and at 2 p.m., S&P went from 520 to 513. About 1.2% decline. So Jerome Powell at a Stanford speech 2 days ago said 3 cuts are our intention. He's the chair of the Fed. He's supposed to be the guy that everyone cares about. But this guy, who in my opinion is looking for a little bit more attention, I don't know why these guys need to be attention. I don't know why they need to be on CNBC. Like, I don't know why they are so important to the broader media, but they get up. He says, nah, we're probably not going to have rate cuts. And then the market decides, you know what, this guy matters. And it seems like Jay Powell needs to reassure the market daily at this point. Tom Lee came out with a report yesterday and said, hey, we're buying this dip because this is pretty stupid. His argument was that, the Fed president saying whatever they're saying is not a reason to get upset at what's happening. And this is a dip that Fundstrat, which is his firm, would be willing to buy, which I mean, look, I bought a little bit of the dip yesterday. I bought 50 shares of Robinhood. I do think that it was kind of a stupid dip. Could we get a further dip? Yes. But it kind of does feel like the market was looking for a reason to cut or looking for a reason to sell off. And the market got that reason, but it's not, it's not the smartest reason, in my opinion, for us to have a massive dip. This is what Tom Lee said yesterday. Today's sell-off is probably a gift. In fact, stocks being weak into the jobs report is actually a positive setup, raises the probability of a rally. We are buying the short-term dip. And as you can see right here, he shows the S&P 500 over time going short into a jobs report, or going, when the market comes down a little bit going into a jobs report, what happens as a result of that. So that is why the market crashed yesterday, for anyone who was concerned about why the market did crash. Wow, look at Sachin, $1.63 per gallon in Malaysia for oil. That's amazing, dude. Like that's absolutely incredible. That's incredible. Yeah, that's not the United States. CPI, I think, is next week, right? Yeah, CPI is next week, March CPI. If that March CPI is not good, oh boy, we're going to have some issues. And in February, I do think inflation came down a decent amount in a variety of sectors. The oil prices that are going up right now, we don't have to worry about that for the March data. We'll worry about that in April. So we'll worry about that in May when April's data comes out. But maybe if February CPI is really good and, the markets can digest that with this jobs report, things aren't as bad for the month of April. Let's get into Dan Ives. He is now bullish on Google, and he thinks it's stupid for Apple to go into robotics. Here's his thoughts on what's happened with the latest updates for the Mac 7.
Director at Wedbush, why are you optimistic about tech as a whole for earnings, Dan?
I think it's going to be one for the ages in terms of digital advertising. All of our survey work, much stronger than expected. The AI revolution is now going from semis to software. So you're going to now start to see the next part of this AI revolution with a better spending environment. And Brian, I think this is going to be the catalyst that gets tech stocks ultimately up another 15% rest of the year. It starts with this earnings season.
Anybody in particular you're looking at most closely?
I think front and center is going to be Microsoft. I think in terms of what we're seeing out of Redmond on cloud, of course, you got Godfather of AI, Nadella.
I thought the Godfather of AI was Jensen Huang of NVIDIA.
Well, the Godfather's
the
Jensen.
consigliere.
But if you look what's really happening now in front and center is going to be Microsoft on the cloud story. And then if you look at digital advertising, Meta, I believe the one to really pinpoint is Google. I mean, we think Google here could be ultimately $30, $40 upside on digital advertising, as well as what we're seeing on the cloud side.
It won't be this.
Dan hasn't talked about Google in a bullish way for a while. So, interestingly enough, I guess his team did research and they were like, hey, Google's got momentum, and now Wedbush is bullish on Google.
This quarter, because obviously it was just sort of not really been announced, reported on yesterday. I think you saw with Google and Alphabet that they're going to start charging potentially for the use of AI in this. That would be the biggest change to Google's business model basically since they were created. That won't show up now, and we'll see if they even do it. So those numbers come in. Alphabet and Microsoft come in strong. If those two come in strong, is that kind of the all clear for a lot of the other names that you cover?
I think this is now going to start earnings going higher, growth going higher. And because that's what really needs to happen. It's not just, we could call it Fab 4 or whatever, Mag 7 minus Tesla. Now the rest of tech, you're going to start to see those robust earnings. And I believe this is really going to be the wake-up call for the naysayers in terms of what we see with tech, especially on the AI revolution, the second, third, fourth derivatives coming through with Microsoft, with Oracle, with others in software.
Well, they say that no two stocks are the same. So what's wrong with Snowflake?
Look, I think to me, it's really Palantir and MongoDB I view as the best plays from an AI perspective on use case. Snowflake, it's really been an execution story. I mean, that's why we've been more hesitant on that name till execution improves. I continue, the best ways to play the use cases is the Messi of AI, Palantir, along with MongoDB.
And who else? Anybody else that you're worried about?
Look, I mean, I'd be worried about the shared owners. I think that's HP, that's Cisco.
What is a shared owner?
A shared owner is basically like you have ones that are gaining market share and losing market share. When you look at Cisco and HP and some of these legacy players, they're giving away market share. And that's why it's Microsoft, it's Oracle. That's really, from a software perspective, they're the ones that are gaining share. And then when you think about this AI revolution, it's just starting. We have $1 trillion to spend over the next decade.
I'll tell you, Oracle, by the way, hell of a story, because people counted them out. They're like, oh, just a boring database company. They really pivoted and have just kicked tail. Almost said something else, kicked butt in that time quickly. Apple, they've got big robot dreams, right? They're like the Isaac Asimov of stocks. You don't like it.
It would be a horror show if they actually spent money on robots. Look at the failed EV initiative, Project Titan. They need to focus on AI. For Cook, his legacy is going to be AI. If they went after robots, that would be a black eye moment for Apple.
So he is not bullish on robots. I actually kind of agree. I talked about this yesterday on the Market Close for anyone that was there, but I am very bullish on humanoid robotics in the enterprise space. Not that bullish on humanoid robotics in your house doing your laundry. Like, that to me is not that interesting. I also think Apple is going to waste time, dude. I think Apple would waste a ton of time if they actually really try to do something like this. It's just not that interesting to me. But he does bring up some good points in the context of Snowflake, Google, and Palantir. So obviously still championing the fact that Palantir is this messy of AI, this company that's going to be able to pull things off. I'm surprised he didn't talk about the Oracle partnership. He retweeted one of the tweets I did yesterday about my deep dive around Palantir and Oracle and why I think this partnership is so important. But as you, the host said that Oracle really transformed themselves from a database company into something much more cloud AI infrastructure. Snowflake has not done that. Snowflake has kind of been a warehouse company for data for a long time, which hasn't really changed. And to kind of put fuel on that point, here's the Databricks CEO talking about Snowflake yesterday for a minute. And what he said was pretty interesting.
This LLM to make Databricks more competitive, I'm assuming principally against Snowflake. This is the first time you and I have had a chance to talk since Frank Slootman stepped back, stepped down. And they brought in a more product-focused leader, is my read. What's your reaction to all of that? What do you make of it?
Yeah, I mean, I think we put a lot of pressure on them, and they realized that AI is important. So Snowflake basically was not doing any AI whatsoever. They're actually a great company. I have a lot of respect for them. A lot of respect for Frank, actually, who I think did an excellent job with that company. But they're primarily a data warehousing company. Data warehousing, super important technology, but it's used to ask questions about the past. How did this product do last week?
It's not predictive.
Yeah, it's not predictive. So, and we've been doing, AI for the last decade. So I think it shows that, the puck is going towards AI. I mean, we see that with these generative AI models, with DBRX, with what everybody, every CEO I talk to now, Fortune 500 company will tell me, AI is super critical for our strategy. We think that actually in our whole industry, data and AI is how we're going to become competitive. Help me do that. So, of course, it makes sense that a lot of vendors out there are kind of pivoting now and going towards AI.
So he says Snowflake is not doing AI. We put the pressure on them to try to pivot. And the market valuation is starting to reflect that Snowflake might not have an AI strategy. This is the one thing over the past 2 years I think all of us got right in the context of the street. I mean, obviously, a lot of us were early to Palantir, but a lot of us also said Snowflake is not. It's not the juice. There's no juice there. It's like the juice is in Palantir, not in Snowflake. Snowflake's still worth a little bit more than Palantir today by $1 billion, even after the drawdown from 237, as you can see right there. On their earnings. And sometimes I felt like, are we crazy? Are we just not getting the Snowflake story given how big of a premium it was trading against Palantir after the CEO left, which, by the way, the CEO would not leave a company if the company was hitting on all cylinders. I don't care how old you are. You don't leave that. That's just that's a ride of a lifetime. You stay there if they're really the juice. There's a reason Karp's not leaving Palantir. He left. And they brought in some random dude who's probably going to be great, but no one really knows them. And then the Databricks CEO, Databricks, a very respectable company in the AI space. They're saying, hey, Snowflake doesn't know anything about AIs. The market can't be that excited about them when it comes to AI. Nonetheless, they did get a premium from the market. And I'll be very curious to see, does that premium go down or does that premium eventually come back given the market thinks it got oversold? And we'll see. We'll see how that plays out at the end of the day. So that's what we got going on right now in the context of Snowflake, and those are Dan Ives' updated thoughts on that. We have some macro data on money market funds. So this thing was also very surprising yesterday. I did not expect this one. We added 70.5 billion to money market funds. 70.5 billion. So over the past 3 weeks, as we've been tracking it, we've decreased by basically the same amount. One week we decreased by 7 billion. One week we decreased by 10 billion. The other week we decreased by 50 billion. We basically added all of that money back yesterday or during this week, 70.5 billion. So we have 6.11 trillion. It is an all-time high for money market funds. What is the bear case on this? The bear case on this is that I think in Q1, people took their profits a couple of days ago. People were like, all right, we made some money. Let's take it out of the markets. Let's stuff it into these money market funds and just hoard this 5% return while we're waiting for the market to kind of correct and then eventually come back. So, essentially people are just doing a short-term trade here. The bullish perspective is that there's a lot of money on the sidelines. And let's say the market does take a little bit of a pullback. Let's say we do fall 5%. There is $6 trillion ready on the sidelines to say, hey, let's get our feet wet a little bit and let's play with these markets, because there's no reason why we're collecting 5%, which, by the way, won't be 5%. Presumably in the next 6 months, that's going to go down from 5%, and people are going to want to front run that yield going down once they have to deal with the fact that the interest rates have got cut, and they're going to come into the market, especially if we get a rate cut before the election cycle officially starts. It's probably around September. I think you could see a lot of money leaving money markets. And if Q2 earnings deliver, which if people have jobs, as we saw this morning, if you're just joining, we added 300,000 more jobs. If those earnings deliver and people want to chase yield before their yield goes down by 25 basis points in these money markets, that money should migrate into the broader economy or into the broader stock market if the economy is doing well. And so that's the bull case on all that money being in money market funds. The question is when that is actually going to happen at the end of the day. Ryan says, do you think Snowflake is a buy at these prices at 150? I do think Snowflake has gotten sold off in a pretty egregious way, and that if they're sandbagging their numbers at all, that if they just kind of crush on earnings, the stock should get closer back to like 180, 190. However, if I was buying Snowflake for a trade, I would look at it. I'm not buying Snowflake for a trade. If I were to buy it, it would be more for a long-term thing. And long-term, I just don't see Snowflake as a leader. And this is not me saying it. The Databricks CEO, Databricks is a very important company in AI. CodeStrap has praised them many times. A lot of people think that they're a massive competitor with Palantir, which they are in some respect. In other respects, they're not. If he's saying, hey, Snowflake is like kind of trash, basically saying that, it kind of validates what I've been thinking, that Snowflake doesn't have the special sauce that Wall Street wanted them to have, but they've been pumped up really aggressively by Wall Street. By the way, Brad Gerstner has not had a good string of results over the past couple of months. One of the top holdings in his fund, Altimeter Capital, is Snowflake. That's been a horrendous mess, and I think their average is still in like the high 200s on that one. Second thing is Tesla. He's been saying FSD is going to be amazing, and like Tesla's held up, but it's down 30% year to date, right? So like Tesla's not been the best. And then Google, he's been saying is going to die. I mean, he says he's not saying that, but like that's what he's saying. And Google's just doing fine. Google's like, hey, we're chugging along here. Now Dan Ives thinks this thing could be like 180, 190 by the end of the year. It's going to be interesting to see how those plays play out. Google, Snowflake, and Tesla by the end of the year. Right now, it seems like Google has momentum on the back of them, even if the woke Gemini stuff ended up messing them up for a little bit. Okay, let's look at Bitcoin. Let's talk a little bit about BTC. So Bitcoin right now, 66,749. It's been pretty volatile over the past few days in particular. We were just at 71,000 on Bitcoin. When was this? On Sunday. I was at the airport in New Orleans, and I was looking at my phone. I was just, getting some work done, and boom, there you go. Bitcoin, 71,000. And I thought this week was going to be great when it came to Bitcoin. I was like, all right, so we're not going to have that big of an issue. Unfortunately, Bitcoin has not been able to hold up. Now, the inflows on the ETFs, which I'm about to pull up right now, are actually pretty good. They've been pretty strong. It's just not been strong enough, I guess, to deal with some of the outflows we're getting from the retail perspective. So this is what we have right here on the Bitcoin ETF. So big day for Fidelity and BlackRock. BlackRock added 144 million in inflows. Fidelity added 106 million. Bitwise, 11 million. ARCB, 12 million. They lost 88 million the other day, so they needed a little bit of a rebound. And Grayscale only sold about 79. So net inflows yesterday were 213 million. The inflows are there. Every time Bitcoin really wants to take a wick down, it has these big institutional buyers like the BlackRocks and Fidelities of the world coming in and saying, actually, we will buy up all the Bitcoin at 64,000, 63,000, and that spikes it back up to 67. So we are about 12 days, I believe, from the halving event, or 15 days from the halving event. Is it going to be a sell the news? I don't think so. I think that halving event actually is going to be important, because this $215 million we saw buy up Bitcoin yesterday from the ETFs, they're going to be chasing a less number of Bitcoin that are available. Now, they will have plenty of Bitcoin to buy if people want to sell their Bitcoin into the halving event, and then there's going to be plenty of supply. The whole supply shock thesis is not necessarily going to play out. But if that does play out, one could argue that this is the time for Bitcoin to have the type of pump that a lot of people are expecting as well. And we're going to see. We're going to see if that plays out. But if that doesn't play out, then it might end up being a sell the news. And if it's a sell the news, then yeah, it's not going to be the most exciting, I would say, if the news ends up getting sold off. It actually would be pretty annoying, I think, for a lot of people that have Bitcoin. But we will see if that plays out. And if it doesn't play out, Bitcoin's back on risk on mode. If it does, then I think we're gonna have to wait. And it happened with the ETFs. The ETFs, when they launched in January, they sold off for a good 2.5 weeks before they gained some momentum. Might happen after the halving event, which would be annoying, but I do think that would probably be the right way for it to happen versus it spiking up immediately to like 80,000. No one probably wants that. And we definitely don't want that before the halving event, because that leads you to fall, right? That leads you to be able to get sold off pretty easily. Nvidia in the pre-market up 1%, 867. Intel 39.89. So Intel, they revised their foundry business, which is their chip making business in the United States, expectations until 2030 for GAAP profitability. Street did not like that. They're down about 9% for the week. So Intel's had a tough week. Dell has had a great week, up 128 right now, up about 1% in the pre-market. So money kind of shifted from Dell and from some of these other companies, and from like Nvidia and AMD and stuff, and they came into some of these other semi plays that we're looking at right now. AMD 167 in the pre markets. It is down 10% for the week. AMD at 227, I think we all knew was overextended and it needed a little bit of a breather, and AMD is definitely getting that breather. Apple is cutting 600 jobs in California. This is correct. So these jobs that Apple is cutting are jobs that were in the car division. That's why Dan Ives kind of said it would be really weird if they focused on robots, because his argument is just like, dude, the car thing didn't work out. You're spending a lot of time on stuff that really doesn't matter. They need to focus on generative AI, one would argue. And right now, the focus has not really been generative AI. It's been stuff that's not really generative AI. It's robots, it's cars, it's this, it's that. It's, maybe a phone that's going to be generative AI oriented. Maybe that phone's going to have Gemini attached to it. Like, no one really knows. And that's why I think the market is in a pretty weird situation right now, thinking of Apple and what Apple would look like. Let's listen to Goldman Sachs analysts. Their argument is that you have to be, when you look at small caps, Tom Lee the other day said that we're probably going to be getting 3,000 on the Russell. That's only going to be happening if we get a rate cuts. Goldman Sachs has a little bit of a different opinion when it comes to small caps.
He's a small cap portfolio manager at Goldman Sachs Asset Management. He runs the firm's small cap core equity ETF listed under ticker GSC. Greg, welcome to the show.
Thanks for having me.
Before we get to the picks, because we do want to get to them, in terms of the rate environment, what do small caps need at this point?
Yeah, you saw a little bit in the fourth quarter when the rates declined to in the 370s. You saw small caps respond very, very positively. I think other financial conditions have eased a bit, which is also helpful for small caps. And I do think that a little bit more rate clarity will be a nice tailwind for the group. We may not get that this week, but I think it's something that we should get more likely in the second quarter.
Okay, let's talk about what you like. And you like the consumer sector. You're all bulled up, you say, about the consumer. Why? What do you see that is so convincing to you that the consumers will continue to spend?
I think the consumer has chosen, very, very broadly with their feet in terms of how they spend their money. And you mentioned two of them. We like the restaurant theme a lot. Shake Shack and Cava are two of them, two companies that are really focused on not just menu, but loyalty. And they're run by management teams that have been very, very efficient on the real estate side of things. Shake Shack has, went through its own troubles before they kind of corrected themselves. And we think the new management team will be helpful there. But Cava has, really learned from the mistakes of the past. And I think that's one that's set up quite well for the future.
Full disclosure,
I did have Shake Shack at the airport. So, I mean, it was really great service. So he's not wrong there.
Worked at Shake Shack. I have to say that, right?
That's true.
And we've been collectively bullish, but how do you wrap your head around valuation? Because it is not a cheap stock at these levels.
I think that there's a bit of under earnings, in what's gone on there. And I think that what you'll see as we move forward is a bit bigger ticket, and I think you're going to get a little bit more on the growth side in terms of units that are out there. I think that they're a bit behind the curve on units as they're waited for the management change to go through. So it's on present numbers, it's not cheap at all. But I do think if you look out 2 years and you start to see something that more aligned with the growth rate that we're looking for.
Greg, we obviously spent a lot of time talking about debating, as everyone is right now, about inflation, inflationary inputs, and the like here. When you think about your sector, they're obviously a bit more sensitive, let's say, to larger cap stocks, and especially with higher rate environment and the like here. What's your outlook right here? And obviously, you pick small caps, you put them in your ETF here. We spent a lot of time looking at the Russell 2000, which is 2,000 stocks here. But are you optimistic, about a broader swath of stocks rather than ones you're just looking at?
Yeah, I think that what we try to look at is, within the Russell 2000, you have a lot of stuff that you probably don't want to own. There's a significant amount of unprofitable companies. You had a large number of SPACs in there for a long period of time. That's starting to slowly drift away. You have a lot of rate-sensitive companies that we don't really kind of get into in the REITs and the utilities and things like that. So if you look at some of the names that not necessarily are at the largest part of the benchmark, but in the sort of the $2 to $5 billion range, where you can find some of the companies that can make their own weather. You mentioned consumer. We like the semiconductor space a lot. I do think that some of the areas in healthcare, some med tech names that we like. These are companies that have gone through an earnings recovery that started to go down 2 years ago before the large cap guys. So I think that these companies can respond favorably, as some of the tailwinds and headwinds balance out a little bit more. But I do think that you have to be very selective in small caps because things can go down with great velocity.
The small cap thesis to me has never been super compelling. And I've said this many times, outside of companies that have a catalyst that are also small caps. Until we get rate cuts, I don't think the IWM can really take off. And we saw the IWM, the Russell, try to break out a little bit when it got to 211 a couple of days ago when we got some really encouraging inflation data. Right now, it's down a little bit in the pre-market at 202. Because if inflation's sticky, which is this jobs report for those that are just joining, we got 300,000 jobs. That jobs report is suggesting, wait a second, if inflation is stickier than expected, how the hell can you buy an ETF that is fully loaded with unprofitable companies that need the cost of capital to come down in order for them to even have a chance of reaching profitability? So I've not been big on IWM. I know Tom Lee's bullish on it, and I think he thinks, inflation's definitely going down in the next few months, and that's what's going to lead to that rate cut, which then, this thing could break out. But he thinks it can go up 50% from here, which I think is just a little tough to see right now, but maybe it does over the next few months if we actually get inflation to come down. All right, so we got 2 minutes until the market opens. Palantir right now, 22.43. Again, the Databricks partnership I thought was a really big deal. I did a video on it on Daily Palantir. The TLDR from my perspective here is that Oracle partnership. Oracle has 450,000 customers. Intel, Zoom, Airbnb, LinkedIn. All the big companies of the world that potentially might want to use something like Foundry or AIP. Now Palantir has access to that distribution. I think that's why the market was excited. Palantir has the ability to offload Foundry instances and workloads onto AI cloud infrastructure from Oracle for the government sector, which is a very important spot, is because Oracle has a very substantial government business. And overall, I think the reason it spiked up 6% is because the market was like, hey, this is a great deal for both companies. The problem is Neil Kashkari came on CNBC 2 hours later and said, yeah, we're not going to get any rate cuts. And then all the momentum died. And that's what it is when you're in the markets. So we'll see how it plays out from there. But so far, I think the data was really good. And I think the deal was very good for Palantir. Friday, April 5th, 9:30 a.m. Another week in the market open. Thank you, everybody, for being here. The stock market is once again open. Wake your ass up. Here we go. Palantir. 22.52 opens up a little bit green for the day, 0.27%. We'll see if that green can continue. Rest of the market is red. Robinhood looking like it's going to fall below $18. Look, to me, that would be a dip that I would buy. I would get excited for that. But I do think the market is taking some profits here, which is reasonable. And so Robinhood is down 1.84% of the day. S&P is actually green. The index is green. Tesla, 168, down 1.5%, back to the 160s from the 170 range. SoFi, 730, down about 0.18%. PayPal, that's green. HIMS is green, 1473. Nvidia 868. That is also green, up 1.26%. Taiwan Semi, 139. We talked about it on Chip Chat yesterday, the podcast I do around semiconductors. Taiwan's manufacturing facilities for TSMC are safe from the earthquake, but if they did go down, 97% of semiconductors would be like, we wouldn't have access to those because they would have to shut down the factory. That is why we need a company like Intel to start making chips in the United States, and the United States needs to pay whatever they need to pay to get that to happen. Spotify above $300. Look at that. Spotify right now, $301.46. Elf Beauty, that's up a little bit, 1% after being down 15% over the past couple of days because of the Ulta Beauty sale projections. Google, 150. Microsoft, 419. Let's go to the Mag 7 stocks. Mag 7, we've got Meta's up at 520. Microsoft's up. Apple's up. Amazon's up. Nvidia's up. Google's up. All of them up about 1 to 2%. Meta being the main one, up about 2% right now at 520. Tesla is down at 169. So that one is down currently right now. Let's look at the crypto stocks. Crypto companies are, wow, look at all that red. CleanSpark down 1%, Coinbase down 2%, Robinhood down 1.6%, Cypher down 3.8%, Marathon down 1%. Yeah, the Bitcoin companies are getting hit pretty bad. And look, Bitcoin's not even, I mean, it's not like Bitcoin's really struggling that much. It's more so that Bitcoin was 72, fell to 64, and now it's struggling to get back up into that 69-ish range. And so the market's kind of just like, not going to give a lot of these companies a premium until they really see Bitcoin get back there. So that is the ride that we're on if you own any of these crypto stocks. Let's go to the semi stocks and see what we got going on there. Wow, pretty much everything's green except Intel. Look at that. SMCI is up. AMD is up. AMD fell pretty badly yesterday, so people are definitely buying that dip. AMD fell 9% yesterday in a day. They basically lost like $30 billion in market cap. Nvidia fell about 4% yesterday. Marvell's up. TSM is up. Lamb's up. ARM is up. ARM at 122. That's down from 140, but that is green for the day. Intel at 38.98. Intel down another 2%. The market really did not like their revision of profitability. But like two things. Intel's either sandbagging or Intel's just being honest, and the market has to deal with the fact that it's really hard building a chip manufacturing business in the United States, right? It's not as easy as it is in Taiwan. And so you got to give them time and you have to deal with that. But the market is selling off that stock from that right now. Rocket Lab 3.8. Wow. I haven't looked at Rocket Lab in like a week or two. Holy crap, dude. $3.87. Maybe this is the time where I finally buy 100 shares so that my good friend Matt Money can't brag when this thing goes to like $20 one day. Because we all know he's waiting to brag when this thing goes to the moon, literally and metaphorically. And I haven't been bearish space. I've just like my thesis on Rocket Labs has been, why do you want to buy a space stock when it's going to take them years and years and years to actually like prove that they're a reasonable company that's profitable, that's winning all these contracts and actually successfully going to space and really delivering value when there's so many other opportunities on planet Earth that are profitable and that are growing. Like it just, I didn't understand what the thesis was behind Rocket Lab, but this stock is getting people excited. People like the potential of space, but to me, it just screams of potential. It doesn't scream of like anything like real, that's happening right now. Blake says 3.8 a minute. You won't get a better deal. It was 8 a year ago. Blake, I love you, but you said the same thing when it was at $5. I love Blake because Blake's been here for 2 years, and every time Tesla was down, Blake, I remember at 270 on Tesla, was like, Amit, you're gonna regret this shit. It's at 300. Tesla goes to 240. He's like, dude, it was just at 270. It's not going lower than 240. You're gonna regret this. Then it goes to 195. He's like, dude, you're not buying Tesla. You're an idiot, right? Like every time it has happened in the comments, and I love it because now it's just a meme at this point. So I don't know, dude. Maybe it probably won't go lower than 385. Maybe, who knows? But if we have inflation sticky for longer, which means rates are higher for longer, yeah, I don't know if Rocket Lab can keep up at 385 because they're not profitable. And like, I don't know. Maybe they do get a little bit lower. You never know. But in all seriousness, it's probably the bottom here at this 3.8 level. But we'll see. We'll see where that goes from there. Uber got a price target upgrade from Jefferies today to $100. Uber's got a price target upgrade to $100 from Jefferies, 76 right now. So Uber got upgraded. Amazon got upgraded to 225 and Meta got upgraded to 525 as well over the past couple of days. Robinhood, 1837. Palantir, 2285. Okay, so Palantir's at 2283. Let's see if they can actually gain some momentum getting back to that $23 range. I think the dip on Palantir, as Chris mentioned in the chat, it's Chris CRM, that Palantir's local bottom was 22.31 this morning. It hit 21.80 the past couple days. I think there's a shot this thing can close at 23 today. There has to be enough people ready to like take advantage of this dip. But if the market turns a little green towards the end of the day, S&P inches a little bit higher for the end of the day, and it is Friday, which is a hard day for the market to be green on because things tend to sell off, we might not have to see Palantir struggle in the low 22s if people end up buying the dip today. But we'll see, because it's been stuck in this range for a while, and usually it doesn't stay there for a long time. People end up getting those shares. Just a question of if that actually happens today. TFC 37.95, Spotify 305, Google 152, Ulta Beauty, that's up 1% of the day. DXYZ, this is that ETF we talked about the other day that is filled with a bunch of startups like SpaceX and Discord and all that stuff. That's up 40% today. So that's interesting. I wonder who is buying that because the volume is only 486,000. So I wonder if an institutional investor is actually buying up this ETF and that's what's pumping it as well. But that one's up 40% on the day. That's an interesting one because that's just startups, though. It's not like real companies. So not sure who's getting super deep into that, but it might just be an institutional investor getting exposure from that perspective. Reddit 4550. Where's Trump? Where's DJT? DJT down 1.5% on the day. So Trump struggling a little bit there. Still, I mean, the company's worth a lot of money. 5.8 billion, pretty damn insane. But Trump SPAC is down a little bit. Well, it's not a SPAC anymore, but the Trump Media Corporation is down a little bit. Snowflake 153, MicroStrategy up about 1%, 1624. Where's Tesla? How's Tesla doing? 168.73. So Tesla's down a little bit on the day. No news came out on Tesla. I think people are just taking profits on a Friday, so that's relatively normal. Fintech companies are mainly down for the day. PayPal's down. Affirm is down. Affirm has just been crushed since earnings, dude. Affirm was at like 45-ish, 46-ish right before earnings. They got destroyed. They got pretty hammered. And so Affirm has not been able to recover. SoFi has earnings in a couple of weeks. Hopefully they can show some good numbers. Coinbase as well is down. Square is down. And then Robinhood at 1825. They are also down on the day. SaaS companies also relatively green on the day. Mongo's up. CRM is up. Oracle is up. Confluent is up. Snowflake up. Datadog up. Palantir is up. Intuit is up. Twilio is down. Kathy Wood has sold a lot of Twilio over the past couple of weeks. And Adobe is down. Their earnings, even with a $25 billion buyback, was just not enough for the market to get super excited about Adobe. Chris says, just to be clear, the buy local bottom you need to view from March 26th to March 27th through today. The pattern is up, up, over, down, under, up, over, and down, but not as far. Yeah, I agree. The bottom over the past 6 weeks on Palantir has been 2170, if I'm not wrong, which we got a couple of days ago. And that one got eaten very, very quickly. 2172. Yeah, 2172 2 days ago on what is it? Like April 2nd when that or April 3rd when that news came out. So that was a bit of a bottom, and then it rebounded to 2250. And then we got the Oracle partnership, which I thought was like, damn, we're like really in the clear right now because like we got past that 22 range and that's enough for the market to buy. And then Neil Kashkari came out and he kind of ruined that. Now, Goldman Sachs thinks that Kashkari is wrong. So right here, they're saying that they expect 3 interest rate cuts still from the Federal Reserve. Their comments came shortly after the Fed president said that this would be hard for us to cut rates if inflation is still here. Goldman Sachs says, actually, we do think 3 rate cuts are coming, and we would be very surprised if the U.S. Central Bank ultimately decided no trims at all were necessary. I think pretty much every bank is on the idea that it is going to be incredibly difficult for the U.S. economy and for the Federal Reserve in an election year with inflation still trending down and unemployment being at 3.8% to not cut rates at least once. The question is, when is that rate cut going to happen? Because if it happens in September, right before the election, I mean, that's a very interesting thing. If it happens in June, you know, when the election season is starting, when the campaign season is really starting, that would also be very interesting. But I think we all expect it's going to happen. Just going to be when it actually goes down. Adam says, yeah, I think we see a triple beat and we go to 9 and then go back like usual. That's the other sad thing about SoFi. If we do get a triple beat and then we go to $9, which I think is very reasonable and it could definitely happen, do we maintain that $9, right? Or does this thing just sell off aggressively and then those $9, you know, those $9 like just they're here today and they're gone tomorrow? And I don't know. My thing is going to be if they actually announce stuff that really matters, like not just member growth, not just like revenue growth, not just gap profitability, but like they really say, hey guys, like we're not messing around here. Like we're really a legit company. Maybe the sentiment can change. Right now, I think if they have a good earnings, it could pop to $9 and then sell off because sentiment on SoFi is just not that good yet. Not that good yet. I know not a lot of love for DNA at 2.3 billion valuation, but DJT at 6 billion, just so crazy. Well, you could say that about a lot of companies, right? Like DNA has a lot more potential, Ginkgo Bioworks, than Truth Social. But the valuation on DNA is crazy. The valuation on Truth Social, I also think is crazy. Now, DNA, I think, is less crazy than Truth Social. But remember, as I've been saying over the past couple of days, people are buying DJT as a political argument, in my opinion. They're not actually buying it to make money. And if they end up making money, I think they're fine. But if they lose money, I think they don't care because it's not about the money here, right? It's about something much deeper than that, which is this idea that they want to protect someone who they feel is being targeted by the establishment. And people are willing to spend money when it comes to that perspective, right? Like people will spend. So that's what you got going on right now with DJT, and I think we'll see if that holds up. But if he ends up really becoming the nominee, I think this thing could rally even more because people will just get excited to support him as he try to end up beating President Biden right now. Let's get an update from Josh Brown and Liz Young on what's going on in the markets and their perspectives on if this rally can continue.
But then when those rate fears ease for the day, it's like a green light to go out and buy them. It's very reminiscent, Judge, and you'll probably remember this, of the risk on, risk off stuff from 2011, 2012, when on a Monday it would look like Europe is Armageddon, and then the next day European currencies would rally, and there would be this like whole group of stocks you could just blindfold yourself and buy any of them. We're doing that now with interest rates, and it's fun. It's interesting. Eventually, everyone learns the game and it stops working. But look at today. You get the rate fears cool off a little bit. What are your top three leadership groups? Surprise to surprise. Real estate number one, up 1% on the day. Consumer discretionary number two, up almost 1%. Number three is industrials. Number four is tech. It's like surprise, surprise. So today
Russell.
So here's what I want to do. I want to coin the term. We're going to call it cut on, cut off. Today is a cut on day, right? You got a little bit of easing in rates. People are a little bit more sanguine about, what's happening with the inflation story, and they'll let these stocks run. If you get something that seems to be negative on the inflation front, or tomorrow's jobs report is a blowout number, or average hourly earnings are way ahead of schedule, you're going to see it be a cut off market, and you're going to see industrials.
Which we got. We got a good jobs report today. Back to cut off market because there's no reason to cut.
Down big, they'll crush the real estate names, they'll hit consumer discretion. So this is the new game. I hope you all learn it. I hope we can have this game for, I don't know, as many weeks as we have until June, July, and then eventually it'll end. But that's what's happening right now, and you could track it yourself on your screen.
So if it's that binary,
cut on today,
as you suggest, right? Rates up and cut off, rates down, cut on. So Liz, do you feel like we are vulnerable? Whether it's Kerry expressing it through selling or trimming, some names that have gone up a lot on these hopes. Josh laid it out pretty well. The market is obviously super sensitive at this moment about higher interest rates because it's traded a little uneasy as rates have backed up. Well, they're back off, and here we are green again.
Yep, and if you look at something like the MOVE index, which is the volatility in yields, that's gone up quite a bit this week. And even though we have a little bit of a back off in yields today, we're still up 15 basis points in the 10-year this week. That is a huge move in treasury yields. So far, it's been a short-term change in trend, meaning yields up, stocks down. That's the change in trend. The year-to-date period saw yields up, stocks up. So I don't think it's definitive yet that that's what's occurring, but I do think that the market is going to run out of patience for this waiting period. We somehow digested going from 6 cuts to 3 cuts very easily. And at some point, we continue to keep pushing these back. I think really the bigger risk, what we are at risk for, is a reheating and a reacceleration in inflation that extends beyond the February numbers because those were explained away by seasonality. If we get hotter inflation for March, we get hotter inflation for April, I think you're going to start to hear conversations about actually hikes coming back into play, and that will make people very
That would be super cut off.
That way cut off.
Well, look, you've just talked about, it was weeks and weeks ago, about the biggest risk you see is the possibility that we do have reigniting inflation
that is
more sticky than
de-risk.
people think, and then the Fed's got to either act on that or just keep rates much higher for much longer than even people suggest.
That is de-risk, and I think if you listen to what the Fed had to say the last time they had the presser, they were basically like, look, a strong labor market alone in and of itself is not going to interfere with us doing what we think we need to do on the interest rate side. I don't think the market believes them, quite frankly. So I would be looking to tomorrow, and don't worry about headline. So we're looking for 216,000 jobs. Don't worry so much about that, because if that's at 300,000, no one's going to fall out of a window. Look at average hourly earnings. Look at hours work. Like, look at the stuff that's really going to filter into PCE in the near term. That's the stuff where the market really might not like it. To Liz's point, she's exactly right. And I remain of the thinking earnings are not the risk. It's just it just isn't. International stuff is not the risk. This is the risk that the Fed says, you know what? One more wouldn't kill anyone. And we're back to talking about when is the next 25 basis point hike. I don't think we're there yet. I just think if you want to worry about something, that's the thing you should worry about.
So how should we view the markets here?
So it's the same story, dude. Are we going to get inflation coming down? And if inflation's not coming down, are we going to be able to get those rate cuts? And until then, I think we're kind of stuck in this purgatory that the market's trying to deal with and reconcile for what's going to happen. Pound share right now, 22.71, up about 1% in the day. Let's see if we can get some momentum. It was just at 22.80. It's trying. I mean, there are definitely people buying it, but there's a little bit more selling, which is making it harder for it to gain some momentum. Same thing with Robinhood. Robinhood was at 18.12, right now at 18.41. So the dip was bought, but it's still a little hard to get that to get inch higher as people are taking profits as it goes higher. NVIDIA, 870, TSM, 140, SMH, semis ETF, 221. That's up about 1% of the day. Dell's down 2%. SMCI is down 1.24%. Verizon down 1.31%. Spotify just mooning on this subscription news. I mean, really, really big news for Spotify. The thing's up 14% this week. So Spotify now above $300, which is just absolutely incredible. Oracle 124, Google 153, and Microsoft at 421 on the day as well. So there is a little bit of a sell-off today, but there's also a little bit of like not sell-off because some like Spotify is not being sold off, right? Even though other companies are being sold off. Like there's it's a weird, and again, I think that's a good thing because that means if you're a company that has case specific news to what you're doing, you have a shot of getting rewarded by the market, which I've said is the best thing about this market. The fact that companies that are executing get the benefit of the execution, they get the reward. Companies that are not, they get the pain. And that's what you want. You don't want it to be 2021 where every single company just goes up because interest rates are zero. So, you know, any piece of crap can get a stronger valuation and the markets are okay with that. You want it to be a lot tougher for stocks to go up. And that needs to happen if companies actually execute. MicroStrategy moving stronger. Let's take a look at that one. MSTR. Wow, that's up 2.46%. Bitcoin is still down a little bit for the day. MicroStrategy up 2.46. Again, the firm that's shorting MicroStrategy, Kerman Capital, I just think it's not the best short because in order for them to short it, they have to really believe that people think that Bitcoin going up will not pump MicroStrategy, that the delta between Bitcoin and MicroStrategy will be obvious enough to the market that the market will just pick the ETF or Bitcoin. They will not pick MicroStrategy. That's not going to happen. They're going to pick MSTR if Bitcoin's going up. FOMO will come in. That thing's going to pump really high. I mean, that thing's probably going to 3,000 if Bitcoin's going to 100,000 or 120,000, and the shorts are going to get wrecked on that one. But it all comes down to if Bitcoin can actually, maintain those levels. If not, then it's going to be in a tough situation. Because we've been talking about robots and we've been talking about Apple trying to get into robots. Here's Brett Adcock, CEO of Figure, a company that recently raised $675 million. He did a new podcast. Here's 2 minutes on his thesis for why humanoid, in particular form factors, are why we need to be thinking of robots. And if Apple's thinking of this, I'm assuming they would be thinking of it in a humanoid fashion as well.
I think there's like really two schools of thought of how to go about this problem. We can either rebuild like thousands or millions of special types of robots that do special use cases all over the world, or we can build a humanoid robot. And the reason we believe humanoid robots are the right solution is that the whole world was built for humans. It was built around humans, meaning the way we look biologically had a significant impact on the way our environment looks. If we were 10 feet taller and we had 6 arms, a lot stronger, the world would look a lot different. When people ask, is the humanoid the right form factor? It's the wrong question. It's just the wrong question to be answered. The humans like the ideal form. It's the wrong way to look at it. We're like a weird biological species. We're a weird form.
But that's the world that exists.
We built it so we can interact with it. If you go to Mars today, you're going to want to go grab coffee. You're going to want to walk around. You're going to want to live in a habitat. You're going to want to do things. And you're going to build a human world around it. And then, so if you want to automate work, you want to build a general interface to that. You want to build the equivalent of the keyboard and mouse to the internet in the physical world. That equivalent is a human form. You can do everything a human can. And the world was optimized specifically for us. It wasn't optimized for us to have 2 more arms or 9 feet tall. It was optimized just for the average human, the average non-expert human. So it's really clear to us here that the right form factor is the humanoid. You can build one hardware system that can do everything, meaning you can spend all this money and time on this robot that can be amortized over millions of different tasks and applications. And then conversely, let's say you don't believe that, you got to go out in the world and look at every single use case, every single task, and build a special robot for it. That special robot needs a company, needs a brand, it needs a team, it needs a culture, it needs to go raise capital. The team needs probably an order of 15 different skill sets that one single person can't do in a full stack software role. It needs firmware and embedded software and operating system and rotor and stator and electromagnetics and battery systems and BMS systems and power distribution systems and thermals, and the list goes on, controls and AI and everything else. And so then you need to raise a lot of capital to sustain it. And then you got to go build millions of those. How is that even tractable? How do you do that across the whole world in all these special use cases? And then you're going to make
Well, it is how the robotics industry works today. Specialized robots, right?
Yeah.
I'm not saying that's efficient, but
yeah,
I think that's where the question comes from.
I don't know if we should be reasoning by that analogy.
So market's rebounding a little bit right now. We'll talk about Figure in a second, but we're getting a little bit of a rebound, guys. Palantir 2288. Look at that. Not bad at all. Pumping up a little bit right here. The entire market, look at that. CleanSpark 1617, Robinhood 1861, S&P 515, Snowflake 154. I think the market took in the jobs data and they're like, maybe not too bad. Maybe the jobs data is okay. It seems like the market's kind of maybe it's not the worst jobs data ever. And they're kind of getting a little bit of a pump based on that right now. We'll see if this can maintain its level, but market's going up a little higher based on this right now. Or I think it's based on the jobs report. Maybe I'm wrong, but we are getting a little bit of buying the dip momentum here when it comes to stocks. Now, in terms of what Figure CEO just said, again, when he's talking about the new form factor of how we should be thinking about humanoid robotics, I think he's correct from that perspective. At the end of the day, if the world was made for humans, the analogy he made that I thought was really interesting was that if we went to Mars, we would want to walk, we would want to climb stuff, right? That's just how the instinctual nature of humans are biologically. That's how we're wired. Well, if that's the case, then our robotics application in the workforce, which is human bodies doing work, needs to match that from a physiological perspective, which would be the robotics form of a human being. And so I actually think that makes a lot of sense. Tesla, by the way, following the same suit with Optimus. To them, that makes a lot of sense. Apptronic, another robotics company, also following the same suit. So you've got a bunch of these robotics companies basically agreeing that the ideal version of what robots look like are in a human form. And if Apple wants to go down that route, they're going to have to figure out what do humanoid robotics look like. And they might have to consult some of these bigger companies like Figure, like Tesla, on how to build these humanoid robots, because I don't think they could just do it from scratch. And so we'll see how that plays out. Benny says the world was here before humans, so it wasn't made for humans. Yeah, I mean, obviously there were dinosaurs and shit on the planet, but the population that ended up taking over was human beings, right? We were the ones that ended up colonizing the whole planet, and there's 8 billion of us. So now I would say the world is made for us, just in terms of how we have engineered how human beings want to live on this planet. But it's going to be interesting to see what the robotics application of that looks like as well over the next decade. What else do we have right here? Yeah, market's doing okay. Market's doing all right. 22.89 on Palantir. I had a feeling it might try to pump to 23. We'll see if that can play out. Robinhood, where's Robinhood at? Robinhood 1864. That was at 1807 or 1812 this morning. CleanSpark, nice 3% bump right there. Coinbase was at 242, now at 251. I don't know what happened. I don't think there's any piece of news. Let me check if there's any macro news that came out. But like basically at 9:52, we just saw a big reversal of the market. And did the 10-year go down? Let's take a look at the 10-year was at 4.4. 10-year right now, 4.36. So it fell down just a little bit, but nothing that crazy happened. Maybe the data just fed in to the market's finally like digested the jobs data. Amazon all-time high. Is it actually here? Is it actually here for Amazon? Maybe that jobs data finally got the market excited. Wow, Amazon. Look at that. I think the all-time high is 188, though. It's not fully there yet. Yeah, 188.65. That's what you're looking for Amazon. Look at that V shape. That's just beautiful. That's the power of DCAing. Look at that. 188 to 81, back to 184. So it's got $4 left to get to that official all-time high once again. So that's what we got on Amazon. SoFi 738, Palantir 2288, IWM 203, Snowflake 153. Yeah, the entire market gaining a little bit of momentum, maybe because that jobs report finally seeped in and people were like, well, if people have jobs, then people are going to buy shit. And maybe there's a little bit of inflation, but if they're going to buy shit, earnings are going to go good. That's what it looks like right now. Anthony says Palantir going to $30 on earnings. I think that is very possible if Q1 crushes, but I think Q1's going to actually have to crush. Like they're going to have to show revisions in revenue growth from 20%, 19.9% to like 23, 24%. If they do that for the full year, if they say, hey, we're revising our guidance, that would be pretty exciting. For those people that are thinking there's going to be a buyback, I don't think there's going to be a buyback at all. That's probably not going to happen. Not anytime soon. Bitcoin right now, 67,500. I think Palantir initiated the buyback to say they're going to do a buyback, but they don't have to do the buyback, and they're probably not going to do the buyback. I probably wouldn't want them buying back shares at these levels right now. But if they have a monster Q1, that'll be enough, I think, for the street to get excited for Palantir. Would you? That is a good question. Yeah, under 100, it wouldn't be the worst buy. Where's Enphase right now? 113. The problem with Enphase, and we don't talk about it that much anymore because Enphase has kind of become irrelevant now, but their whole story was that they were going to take over the world when it came to solar panels. And interest rates have stopped the solar panel thesis from playing out in a meaningful way because too many people can't finance solar, right? And so the idea that they were going to have this massive penetration, it might happen over the next 10 years, but dude, the story's kind of played out. It's boring now. No one gives a shit anymore. And that we were talking about this over the past couple of days, right? The idea of narratives with stocks. Like if people don't care anymore, you're done. A lot of people were saying, I did a Twitter Spaces yesterday, right? And on the Twitter Spaces, someone commented, or someone was commenting under it. They were like, the Vlad wouldn't have done the interview with you from Robinhood if the stock was $7. And my response was like, yeah. No shit. Like if the stock was $7 and it was in the gutter, of course he wouldn't have done the interview, because you don't want a public CEO spending his time doing an interview, an hour-long podcast with some random dude, if the stock's in the gutter. But the stock's not $7. The stock is up 100%. The stock is up more than 100% since that point. Momentum is behind their backs. They just had a major gold event. The market is initiating a new price target every day, $30, $25, $22. JP Morgan at $24 for Robinhood. So when you have momentum, when you have tailwinds, I think you lean into that momentum. And so I think it was actually very strategic for Robinhood to do the interview, because to them, they were like, wait a second, the world cares about us again. We're rechanging our image from the company that screwed everybody to GameStop. Here's this kid who's gaining some momentum on the internet, and people are actually listening to a little bit of what he has to say when it comes to our company uniquely. Let's give him an interview. And I think Vlad made a really strategic. It's one of those things I think Noto should be doing with SoFi. Now, granted, They, I think, will need to wait to get a little bit more momentum because their stock's still stuck at $7. But if they crush earnings, Noto needs to call Tanner and say, let's do a podcast. I really do. I think he needs to do that because we know SoFi is so retail driven. We know SoFi is majority retail driven. Out of those billion shares, I'm not sure what the institutional float is, but a far majority of them are retail based. And so why would you not speak to retail? Now, ironically, Robinhood is 91% institutional based. So Robinhood doesn't even have as big of a retail holding as SoFi does. It's actually minimal compared to their institutional holdings, but still repairing their brand image, I think, is one of the core things they wanted to do. And they wanted to lean into the momentum. I think SoFi should do that. I really do. I really do think SoFi should do that. I think it's a smart thing to do. You know, again, when I was talking to Vlad about like why he wanted to do the interview, his argument to me was that he's been reading my tweets and he was just like, your analysis is just as good as some of the people on the streets. So like, why wouldn't we like actually talk to other people who are following our company that deeply? And so to him, who's building a product for retail at the end of the day, I mean, Robinhood, people are retail investors using it. It makes all the sense in the world to talk to someone from that community and give them a little bit of time to pick your brain. I think that made a lot of sense. And I think leaning into it made sense. But if the stock was at $7, $4, you know, the stock was not doing well, then it wouldn't have made sense to do it. So I think it's all about narratives. And the reason I brought all this up is because Enphase's narrative has gone down the drain. It's down 6% on the day. The reason it's down 6% is probably because that jobs report indicates that we're not going to get rate cuts anytime soon. And if we're not getting rate cuts anytime soon, then yeah, Enphase is not going to be in a beneficial position. So Enphase is going to take a few years to get back to the levels that it was at. And that's if interest rates come down aggressively, which if it doesn't come down aggressively by 2026, this thing is dead money, in my opinion. Like, I don't know what the catalyst is for Enphase. At least for Tesla, you have more catalyst than cars, but for Enphase, it's literally solar financing. And so that's important. That's going to be really, really important to see how that plays out. Vlad has a mid on speed dial. No, I don't have his number. Some people are like, do you have his number? I was like, no, I do not have his number. We didn't get that close where we could exchange numbers. We don't DM anything like that. I have to go through his like people to talk to him, if anything. But it was really cool, dude. It was really cool that with the fact that we got to do the interview in general. And I think, look, now that we have a bit of a relationship, I think after Q2, maybe he wants to come on the channel again, just even through like Zoom or something, and or like join the market open and talk about Q2 earnings, right? It doesn't have to be like a full hour-long podcast. It could be a 15-minute segment, just like he goes on CNBC and Bloomberg and Wall Street Journal. He could come on our channel and talk about the earnings. And I think that's the cool thing about developing that relationship and seeing that narrative potentially change over time. That would be the cool part. Is the rumor true that Tesla's making a hybrid? No, I don't know where you got that rumor from. I don't think that's happening. I don't think Tesla's making a hybrid. I'm just going to Google real quick. Tesla hybrid. That would be hilarious, dude. Could you imagine Tesla makes a hybrid? There's no way, dude. There's no way Tesla has gas in their vehicles and at any capacity. So I would say that's probably not happening. That's probably not happening. People need cars regardless of interest rates. That is true. That's another reason that, like, my dad just bought a car the other day. That's really, you know, and he's enjoying his car. He did have to fight with the dealerships, dude. He went to like 7 dealerships trying to get a good deal because you know my dad, like, he negotiates. And at the end, he ended up paying a couple thousand more, but he got a lot of like upgrades to the car and custom leather and all this shit. But even for my dad, dude, he wasn't getting the best deal. So I think from my dad's perspective, who is like a lot of Americans, if they're trying to get a good deal and they go to 7 different dealerships and they really are like, none of these dealers are budging, right? They're just not giving a good deal. Financing a Tesla is not going to be easy either, right? Even with the EV subsidy, that thing's still going to get expensive at the end of the day. And so you could just imagine that it's really not Elon's fault here. It's the rates. It's hard to finance cars, especially top-end vehicles like a Tesla. So yeah, sales are going to be down. Of course they're going to be down. But that gives us an accumulation year for Tesla, which is not the worst thing in the world. Okay, where is this market right now? Are we still having some momentum? Where's Palantir? Palantir. Are we at 23? Did we get to 23? Palantir. Wow, 22.97. Look at that. Look at that, dude. Look at that. Wow. Dude, I like literally 40 minutes ago, I was like, I have a feeling Palantir could bounce back up to 23. Look at that, dude. Incredible. Freaking incredible on this Palantir. Incredible. 23.04. What a nice recovery, dude. What a nice freaking recovery. Now, let's see if it holds. The hard part is to see if it holds. I mean, it's always hard to see if this shit holds. But that's not bad, dude. The reason I said that 40 minutes ago is because I saw it go from 22.30 to 22.60. And that's when I pulled up the chart and I was like, wait a second, dude. I think the jobs data is not that bad. If we were going to sell off, we would have sold off by now. Maybe there's enough juice to buy up that dip. And it looks like so far there's a little bit of juice to buy up that dip. So 23.05 right now for Palantir. Robinhood 18.64. MicroStrategy up 3%. SoFi 742. Entire market getting a little wind behind it. Bitcoin is still struggling a little bit, but markets are up. S&P 516. CleanSpark 1632. Coinbase 251. Celsius is up 1.4%. Nvidia up 1.79%. But look at Palantir. Not bad, dude. Not bad at all. At 23.06. Not bad. It's what we wanted to see. It's what we wanted to see for the day. There you go. There you go. There's Palantir, 23.04. All right. I think that's it for me. Let's see if it plays out from there. Let's do word of the day, and hopefully by 3:45, we're still looking at a $23 Palantir. Again, that Oracle deal, they deserve to be 23, dude. At least on that Oracle deal was phenomenal. Let's see if that continues to happen. But I'll see you guys in the market close, and we'll keep going from there. All right, word of the day. I know this word. I actually know this word. Plethora.
Plethora.
Are you kidding me, dude? It's plethora. It is not plethora.
Plethora.
No, it is plethora. Dude, okay, honestly, put in the chat if it's plethora or if it's
plethora.
Just put a 1 if I'm right and put a 2 if you think dictionary.com is right. Put a 1 if you think I'm right. Put it because it is not plethora. It is plethora, not plethora.
Plethora.
I have never heard it as plethora. I'm not trolling, dude. I'm not trolling. I am not trolling. I'm telling you, it's plethora. The fuck is wrong with this website, dude? Oh no, do not tell me everyone's putting 2s in the chat. Do not tell me everyone's putting 2s in the chat. Dude, no, you guys are trolling at this point. It is not plethora, it is plethora. Who put a 1? Did anyone put a 1? Okay, Ukshot put a 1. Ukshot, let me know your address, dude. Let me send you like a fucking gift card or something. Like at least someone fucking understand. Like, is he the only one? Is he literally the only one? Okay, Surrey and Ukshot, you guys are invited to like my wedding or something because everyone else is just, this is just disgusting, dude. It is not plethora. It is fucking plethora.
Plethora.
Okay, we got to get another. We got to go to another website because this is bullshit. I'm not handling this shit, dude. This is not. I'm not getting that shit wrong. Google, how do you say plethora? It's plethora. It's not plethora. Fucking okay. Here's Google. Okay, I think maybe we're gonna get what I want from Google. Here we go. Where's this shit? How do we say? Okay.
Plethora.
It's not plethora.
Plethora.
It's not plethora. I don't believe this shit, dude. This fucking fake news. I'm going to. What is Bing? Does Bing do? How do you say plethora? Does Bing have? Oh, there's a YouTube website. Okay, here we go. There's a video. There's a video. I found a video. Here we go.
How to pronounce this word, as well as what are synonyms of this word in English. How do you go about pronouncing it? Plethora.
Oh my God, dude. It's not plethora. It's plethora. This is the dumbest shit. And everyone's wrong on this. I don't care. Everyone's wrong. This French guy from 2008 who made this video, he's wrong too. All of you are wrong. I don't care. I don't care. It's plethora. I've been saying plethora because I was actually excited about this word because I've used this word a significant amount of times. I know the definition of this word. I've used this word many, many times. And throughout my entire life, it describes a large quantity. I've been saying, wow, that's a plethora of yada, yada, yada. I have never said plethora. What the fuck is a plethora? What is that? It's plethora. You guys are wrong, dude. I'm telling you guys. I gotta call somebody. Fuck this shit, dude. I'm gonna call Steve. He's probably so busy, but let's call Steve. He's probably not gonna be able to pick up. I need someone to reinforce me on this. Everyone in the chat is wrong except Abhishek and and Surrey, or Arkshid and Surrey. Everyone's wrong. I need someone, dude. I need someone. I cannot go down. Like, I'm not going down like this. No, it's plethora. Fuck this shit. Okay, Steve's not picking up. Let's see if Chris would pick up. Let's see. Let's see. Let's see, dude. Let's see. It's plethora. I can't call Vlad. Not that cool with Vlad yet. If Vlad said plethora, I might cry, dude. If he said plethora, I would cry. No one's picking up. Oh my gosh, dude. I need some reinforcement on this. All right, you know what? I'm gonna ask a bunch of people later throughout the day, and when I come back to the market close, I'm going to make an argument about this. You guys are wrong. I'm sorry. You guys are wrong. It's plethora. It's plethora. A plethora of number twos. It's plethora. I will say plethora forever. It's not plethora. It's not plethora. There are some there are moments in life where you have to stand up for yourself. Okay. Because the world will try to tear you down and the world will try to say that you're wrong. And sometimes you have to be naively delusional to chase your dreams. And this is one of those moments. I am not letting my dreams fall. You have one life. You have to protect your vision, your dream, your sanity, your sanctity, your ideological understanding of the nature of existence. I will not let plethora become plethora. I won't let it happen. That's it. That's it. I'll see you guys at 3:45, and I'll have a lot more data on why everyone's wrong. I'm going to ask a bunch of people, and you guys will see that it's plethora. That's it. I'm sorry. That's it. Thank you, guys. I'll see you guys later. It's not plethora. It's not plethora. What the fuck is that? It's plethora. Bye, everybody. See you guys 3:45. Bye-bye. All you guys in the chat keep saying I'm wrong. I don't believe it. I think you guys are wrong. I think the chat is wrong. I'm going 1 against 916 people. It's okay. I'll be the underdog. I like being the underdog. I like being the guy on the island. I like being the guy that no one believes in. Because I'm going to believe in myself. Okay? I'll see you guys at 3:45. Bye, everybody.